All right, so I'm Sean Carter from Movement Mortgage, and this is
I'm Dennis Muchow, a realtor here in Southwest Florida. Welcome to our podcast, episode one. So very
Mhm.
excited to be here, and I appreciate you guys inviting me here at Movement Mortgage today to talk a little bit and have this conversation.
Dennis and I are going to talk about some real estate, some mortgage things, and kind of just talk about what's going on in each other's market. And I think it might be real useful that people might be watching to get some kind of insight as to what's going on right now in the market.
So I think that we should talk about probably the big elephant in the room. I know there's been some movement there recently,
No
which is
pun
going to be mortgage
intended,
rates.
right?
Right,
Movement.
movement, yeah. Which is mortgage rates. So, what do you think as far as mortgage rates, kind of where we're headed? Like, what do you think the future is going to bring with mortgage rates? Do you see differences happening in your business right now because of the new movement there?
So right now, we've seen some nice improvements over the last few weeks. Um, there, last year we had a nice decrease in rates, in September when the Feds met. But most of those improvements came prior to the actual half point that the Feds reduced the rate. I think that's going to kind of be the case this time too. I think we're going to be seeing most of the improvements on the rate prior to the actual meeting, and unless of course we're in kind of unprecedented times, have been since COVID. Everything's kind of been a little bit different, and
Right.
all the experts have kind of been thrown for a loop. And Barry Habib from MBS Highway, we had a podcast with him not too long ago, and he gave us some of his market insights. And we're we're definitely looking at very high probability of having some increases or some improvements on rates. We just have to how much, that's kind of the question mark here.
Do you see do you see consumers coming back? Like, do you see a spike in mortgage applications on your end?
Yeah, we've seen a little bit of an improvement on people getting more, like, talking about maybe moving forward with their application. Um, as far as, we haven't seen a big spike, it's probably been very subtle, at least on our end.
Yeah.
It does vary based on different areas. I think we're in a very, a little bit of a challenging market down here in Southwest Florida. We saw a little bit of a decrease in business because of the interest rate increase.
Yeah.
And we kind of like feast or famine. We were one of the hottest markets, and then the rates going up kind of put us in one of the worst markets. And I think you're going to see some real rebounds here because of the rates.
Yeah. No, I feel the same way in my business. So I definitely see for about a couple of weeks now, maybe a month or so, like a lot of new inquiries coming in on listings that have been sitting a little bit.
Yeah.
So I see more showing requests happening. I see inquiries as far as emails go, or people calling me. So there's buyers out there. That there's no question about it. And I think a lot of people do anticipate the mortgage rate drop now.
Mhm.
So with that anticipation happening, I think a lot of people are going to be entering back into the market to finally make that move.
Yeah, I don't think it's going to take much. I think even right now, I mean, with some modest points, you're in the fives. Definitely, definitely with FHA or VA, you can get in the fives pretty easily. I think in the fives kind of really makes a difference, being able to get in that, out of the sixes.
Yeah.
And we'll see here next, coming week or two, what's going to happen with the feds, and how much that affects our market, our industry, as far as is improvements on our end. So
Let me ask you this: like, other than the rate, is there anything else that buyers maybe should focus on that you think is going to be maybe more important or as important as the rate right now?
um well, I think everybody's wishing for the better rates, and there's a lot of buyers, as you can probably attest, sitting back on the sidelines waiting for rates to improve so that they can get off the sidelines and maybe start that process. And the I think the risk of that is that it's a timing thing, and it's hard to time the market if you don't know. It happens very quick.
Yeah.
But if we get a substantial improvement in rates and a lot of people start deciding that now's the time to buy, that could change the supply demand. And what you don't want to do is, if you've been waiting, is that you get to that point where, okay, the rates where I want it. Now you go out and try to find your house. You found the house. Now you're competing with three other people, four to five other people
Right.
that want that place, and now you're having to overpay. So all the gains you got with a better interest rate, you're giving back in the form of a price,
Right.
back to the buyer or
Yeah, I
seller.
think I think timing is like super super important, but you can't time the market. Like it's almost impossible to time the market. So you just got to feel out what's more important to you. I tell people it's a good time for you to rent or buy based on their long-term goals, you know what I mean?
Mm-hmm.
So
Yeah,
if they can afford a higher mortgage rate for, 2 3 years and it's no problem for them, good time to buy,
hundred
right?
percent. Yeah,
Then they can refinance later. But if they're not prepared for that, then they should probably not buy right now. So
yeah.
that's kind of like how I, tell my clients and give them my opinion based on what their situation is.
You probably get this question a lot, just like I do. Like, you get people who aren't in our industry say, "Hey, what is it a good time to buy? Is it a good time?" I think that the right time to buy is if you can afford to buy. I think home ownership is important. Maybe this doesn't apply if you already are a homeowner. It's just a matter of, hey, you're looking to upgrade a house. Maybe there's more of a timing issue there. But if you're a first time home buyer, I think the best time to buy is when you're financially able to swing it, because prices don't go down on houses over time. I
Right,
mean,
right.
that.
Yeah, I mean the mortgage rate changes, but the
Yeah,
price doesn't change. So
no,
that's something you can change down the road later
yeah.
on. So
And I
yeah, I
think
agree with that.
I think that with the buyers, right now the buyers are getting a lot of help from sellers. And that's something we could talk about later. But I think that trumps, in my opinion, that trumps rate,
Right.
um, in a big way.
Yeah, we'll definitely go over that in this video, so stay
Yep.
tuned for that. I got a couple of very important market insights, things that are happening in my professional experience,
Yep.
and we'll go over some stuff like that as well. So, Sean, like based on your experience right now and in this current market climate, are there any good like loan products, or is there anything out there, any programs out there that might help buyers that don't think they can afford a home get into a home right now?
Yeah, I think first time home buyers, this is the best opportunity for them market wise, with a lot of different for a lot of different reasons. But I think a lot of first time home buyers, I think, make the assumption that they just can't afford it.
Hmm.
And mostly it comes down to they just don't have very much saved up. They feel like, I got to save up 20%. And obviously one of the biggest myths in our industry is that you have to have 20% down to buy a house, and that's not at all the case.
Yeah.
FHA is 3.5%. Let's say that's even, you also have to have closing costs, and uh, sometimes buyers don't know exactly what they need, but they know they have to have a good chunk of money, and it's hard to save right now with a lot of the inflationary things. But if that barrier, breaking that barrier of having enough to get a house, and it really kind of comes down to down payment assistance. And with the down payment assistance programs that we have access to, it really takes that part away, that excuse. You don't have, the 3.5% down. Well,
Yeah.
there's 5% programs. There's Hometown Heroes.
I was about to say that.
Yep,
I've seen a lot of conventional loans, for example, that have 5% or 10%. I've seen those
yep.
in the past. And what about that whole Hometown Heroes program that a lot of people
the
talk
the
about?
Hometown Heroes program, it came back out. Had a little bit of a delay because the budget took a little bit longer to get approved in Florida, but they revamped the program. If you're fall within certain occupations, typically like your first responders, police officers, teachers, healthcare workers, court workers,
Yeah.
and that kind of thing. So those people have access to a 5% down payment assistance, reduced closing costs, and a competitive rate through Florida Housing. That's a great program. We kind of wish it was still open up to everybody in the state of Florida, all full time employees for all occupations, but they reduced the amount. It's only 50 million instead of 100 million as it
Yeah.
was in past years. And
So that's going to be like used up pretty quickly. So
I think that's the whole point, is why they want to give those people access to it. And since they don't have as much, they had to do something to help the money last. And I
yeah,
mean, who knows what all the reasons are, but because of that program becoming a little bit more restrictive, um, lenders are having to look at other, or even buyers having to look at other sources. And like, we have a program, it's called Movement Boost, and you get up to 5% in down payment assistance. It is set up as like a little second mortgage, but it allows you to especially when you put a little seller concessions, a little bit of seller help towards closing costs. We've closed. I've personally closed in the last couple of months, three loans with this movement boost, where people had to come to closing with little to no money out of pocket. Like
right.
like
Yeah, I always tell people like if there's a will, there's a way, right? And I had a lot of clients that didn't think they may be able to afford a house right now, right?
yeah,
But in this market, it's like everything's negotiable. That's what people don't realize a lot of
yeah,
times. Everything's negotiable. So you can get seller credits right now. I've gotten people into homes with no money down. I've gotten people into homes with, they got paid at closing to move
yeah.
into their house. So that happens right now in this type of market because it's just the perfect setup for it. And getting a little creative can help a lot of buyers, get into a home even today. So
Yeah. I can't. I probably, of there's one takeaway from anybody watching this, is like, if you are a first time home buyer, or you're an agent and you have first time home buyers, you know it has got to be the time for them to make a serious decision to getting in this market and try to take advantage of all the programs, between the down payment assistance, the seller help, the rates coming down a little bit, creating an opportunity there, affordability wise. So Dennis, so like, overall, when you're talking to clients, you probably get that same thing, that same question:
mhm.
is now a good time to buy? So, from a real estate point of view, is now a good time to buy? Are
Well,
we
I
are we are
mean,
we bottom, or are we?
it's hard to say. I mean, I do have like some pinpointers as far as like data goes that make me think that yeah, we may have hit the bottom. We may be on the other side. But is it a good time to buy? There's a big stigma going out there when me as a realtor say it's a good time to buy, because people think you're a realtor, you're always going to say it's a good time to buy, right? But at the same time, I never lie to people. Like if it's not a good time for a seller to sell, I tell them right there it's not a good time to sell, right?
Yeah.
It's not a good time for them to buy. I tell them it's not a good time to buy. Like I can care less if the market goes up, down, sideways. At the end of the day, it's about having happy clients.
Yep.
And is it a good time to buy? I think it really depends on their situation, right? If they
Yep.
can, like I mentioned earlier, if they can hold a higher rate for 2-3 years, if they're prepared to do that at least, then I think it is a good time to buy, because then you don't have to compete with the rush of buyers coming in later, and you can refinance. Marry the house, date the rate. Even though I
Yeah.
hate that saying, but it is true in some cases. But if your short-term goal is to get a house and maybe sell it in a year or two, it may not be the best time to buy for you. Then it will probably be a better time to rent.
Yeah.
In some cases, a better time to rent right now with these rates.
I was talking to an agent today, and we were talking about this same thing, and you know we have different perspectives on it.
Yeah,
I think you always buy now and worry about the rate and stuff later. Obviously, that's, maybe I'm a little bit biased too, because I'm a mortgage guy. But he was telling me that there are some people that have bought in 21 and 22 a little bit underwater right now,
yeah,
because they overpaid. And let's face it, if you came in strong in 21, you bought a house and you went 30 grand over. I mean, that's that's a prize for winning. Doesn't mean that your house is instantly worth 20, 30 grand more because you paid 20, 30 grand more. The market's the market. And so
right.
there are some people that are underwater, but a good percentage of them are the people who overpaid, got a little bit excited about the frenzy that we were dealing with. And there are some houses that are underwater. And I think that's just you don't lose it. What they say, it's not a loss until you go to
Until you
sell it.
sell it, yeah,
Yeah.
yeah,
So it's just a paper loss. It's going to come back. The property values in Southwest Florida have always had strong appreciation year over year. If you take, maybe getting off kind of our topic a little bit, but if you look at the appreciation, this is probably more I should probably defer to you, but isn't the appreciation over the last, let's just say 5 years,
It was incredible.
it's incredible.
It was
So
incredible.
even using today's numbers, if you bought a house 5 years ago, where are you
Still
at?
way ahead.
You're
Still way
so
ahead.
far ahead.
Yeah, it's crazy. And on the flip side too is like I had buyers that I've been working with since 2019. Okay, and they always like, well, there's a market crash coming. There's a market. Some of these people don't have houses to this day. They got priced out.
Yeah.
And that's going to happen again, unfortunately,
Yeah.
for a lot of buyers out there.
Yeah, they thought the rate was okay, but they just thought I think that's a human thing. Like, I look back to when I bought my house 5 years ago, and I didn't really think it was a great price. Matter of fact, I thought, man, they didn't take my offer. I paid a little bit more than I wanted,
Yeah.
and the house I bought 5 years ago is the best I've ever done on a house, and I'm like, at the time, I didn't think I was getting a very good deal.
Right.
And I think you always think that when you're
in hindsight,
buying.
you always
Yeah.
think that way. So I personally think in the next 5 years, next 10 years, prices are going to be higher than they are today.
I think you're right.
I'm pretty.
Well, they're definitely going to
pretty
be higher.
confident
It's just a
on
matter of
that.
how much higher. And
Yeah.
our the rates fluctuate obviously, but it, up and down. But when it comes to house appreciation, that's for the most part. You take out the outliers, and it's up, and that's the
Yeah.
only direction a house goes. And you got a very few exceptions in real estate. And but overall, I mean, your best bet is to buy now. I think you agree.
Yeah, no. If you look at the grand scale of things, like the last 100 years, right? You got that stairway to heaven type of thing, where there's going to be valleys and then boop,
Yep.
boop, boop. So I mean, that's just how real estate goes. I mean, it's really tied to inflation, which inflation will never be zero, anyway.
Yeah.
So because the dollar is a very inflationary currency, and as the value of that goes down, assets go up, and real estate's one of those. So
I tell you, a good absolute test for anybody who doesn't believe us on this. Go to anybody. I don't care who it is, your brother, your sister, your friend, your uncle, your boss. And if they have a mortgage, ask them, if they bought a house over like 10 years ago, ask them what their mortgage payment. I guarantee you'll be like, that's it.
Yeah.
And it's, if you talk to anybody who had a house they bought 10 years ago, did a mortgage, the payment is so much cheaper than you would ever expect. And that's the key. I mean, like, if you get a mortgage today, 10 years from now, it's going to seem like it's very cheap.
Yeah, no doubt about it.
So Dennis, what are you seeing right now in inventory? Like, where we at?
Inventory today, I don't think it means as much as inventory did in 2008. Because you guys have done a great job, making sure that people can afford their mortgages. And so even though we have a lot of inventory right now, or more than we had in the last couple of years, and there are certain deals that you can get out there because of that, because sellers have to compete. I see a trend that's been going on for 2 months now, which is that our inventory is decreasing, and that at a pretty rapid rate. So if you look at the numbers, right, I've checked the numbers in the MLS, and this is for single family homes in Lee County in our MLS, right? We had 740 properties come on the market, and then I looked at all the properties that came off the market and was almost double. So 1,400 properties came off the market.
That's a good trend.
Yeah. So if this happens, consecutively over the next couple of months, we're going to be in a house deficit here pretty soon.
Yeah. And we have to remember, again, this is still your territory, but it was very, very well publicized before the rates skyrocketed and the market kind of stagnated. We were at like a 4 million house deficit from meeting demand. That didn't go away. Like, it's not like 4,000 people or 4 million people just died and they don't need their house anymore. That's still there.
That demand is still there. It's just not active right now, but there's going to be a certain threshold, I think, which is going to be interest rates, right?
Yeah.
Once that certain threshold is met, these people are going to swamp back into the market. I see it coming. And we're going to have another year, another 2 years maybe, just like we had during the big flu there. That is going to elevate prices and make all the houses sell on the market. There's going to be another bidding war going on. But another thing is, which is a very important factor, and this is consistent with what I've been saying in the last couple of videos or last couple of months, because everybody's like market crash, right? The big word, right? I don't think that this market is anywhere near to 2008 simply because people can't afford their mortgages. So if they can't afford their mortgages, I've been seeing this in the trend with the properties coming off the market. Is a lot of sellers are just going to pull their property off the market if they can't get the asking price that they want.
Mm-hmm.
And I've been seeing that consistently for a long, long time. They're just going to hold on to it, and that's why we're not going to have a traditional crash where prices go down 50%. This is more like a crash of the transactions, basically.
Yeah, yeah, yeah. I mean, I think it's impossible for the market to crash when there's so much equity. Now, yeah,
Yeah,
yeah, there's some people underwater, but for the most part, as a market as a whole, there's a whole bunch of equity because,
a lot.
you know, for the last 5 years, I don't have the exact statistics, but from our end as mortgage professionals, we're giving pre-approvals to people, for years that we're losing to cash buyers,
Hmm.
and it varies from month to month, but for a while there, it's a 50-50 split in some of the counties down here in Southwest Florida on cash and finance transactions. So when you have half the people, in Naples and Bonita and Estero and Fort Myers and Cape Coral, that it's a little bit higher percentage, in Naples and Bonita area, but that own their homes free and clear. You can't be
Yeah,
underwater when you own your home free and clear. You're not a desperate seller when you
right.
have a house that's paid off.
Yeah, and what I see happening too, is that a lot of the like median price homes, like 350,000, maybe 550,000, like those are the ones that are struggling the most. Like the middle class is struggling the most. Kind of what I see.
Yeah,
If you have something like under 250, like a great deal, maybe a fixer upper. I mean, those sell like that, right?
yeah,
Multiple offer situations. I had a couple of those this year. I mean, even though according to the Wall Street Journal, we're in the worst market ever, but there's buyers out there that are actively looking for that. So those are going to do
yeah,
well. And also the higher priced markets, right? Like you mentioned,
yeah,
Naples, Bonita, Marco Island. I mean,
yeah.
those people, a lot of them, they
It,
don't care what the rates are. They buy cash, and those still fly off the shelf all
stock
the time.
market's doing good, and those people
Yeah.
that have built wealth up, and they're either retiring or just getting ready to retire or just retired, and they've built up this wealth over years and years. They don't even care what the interest rate is. They don't care about inflation.
Nope.
Their portfolios are doing well. They got the cash. They're going to buy the house. It's not an issue. Those houses are going to, they may be looking for opportunities, but they're not they're not affected by the same factors that we're talking about here
Right.
mostly today.
Now, Sean, like despite the market, right, despite the rates, despite all the things that are going on, all the uncertainty, right, if a buyer still wants to buy right now, obviously there's a lot of creative financing options out there available. And I've heard a couple of terms like 2-1 buy downs and
Yeah,
maybe HELOCs or bridge loans. Like what are those about, and what clients would that benefit?
sure. Well, we already touched on the down payment assistance. Obviously, that's a very very effective financing option to get somebody in the market that maybe wouldn't normally qualify. But there's the 2-1 buy down. It's a great seller tool. From your point of view, you work with a lot of listing agents or a lot of sellers as a listing agent,
Right.
and giving them something to attract buyers. A 2-1 buy down is there. So what it is the first year the seller pays for this. It's only the seller can do a seller buy or a 2-1 buy down.
Yeah.
And the buyer benefits with a 2% decrease on their rate from whatever the rate they qualify for, 2% the first year, and then 1% the second year, and third year it reverts back to whatever the contract, the mortgage rate is on that loan. And a lot what that allows them to do is buys them some time to afford that cheaper payment and refinance. At
So
that
if you're
point,
super confident that like in 2 years from now the rates are going to be better than they are today,
yep,
right? Then that would be a good product for you,
yep,
basically. Right?
yep. And it allows it's great for relocation people who are just maybe moving here for a few years. They can benefit from that, but it's an opportunity to creatively get a buyer off the fence.
Mm-hmm.
And the other another creative loan product, for somebody who wants to buy but just isn't really feeling comfortable, is a bridge loan. So if you have a loan right now on your house and the market can be slow for certain houses, you just don't know when that's going to sell. You can do a bridge loan and have access to your equity, because there's a ton of equity out there.
Yeah.
Have access to your equity to use for your new purchase, and you have a time period to sell that, usually very generous, like upwards of a year to
Oh,
sell
really?
that house. Yeah.
That's plenty of
And
time. Yeah.
yep. And most of your bridge programs, you're not doing two house payments. It's one mortgage payment that you can afford.
Sweet.
So another creative tool for buyers right now are HELOCs. HELOCs are home equity line of credit, is what HELOC stands for, and it's a way. This is a good option if somebody is a high earner and they can afford to buy their second home or another primary home. Eventually transition their departure home as an investment. But maybe prior to doing that, they want to take some of that equity out so they can do a HELOC on that loan on that first house and use it to purchase the second one, or if somebody wants to get into investing, they have, again, a lot of equity in their primary home. They want to get into investing, take advantage of some good deals right now,
Yeah.
and take that equity loan against their first home to buy another one. Great. You work with a lot of investors, so I know that's a
Yeah, yeah. I
great
know
tool
the
for you.
investors love it, but it's more like a credit card, right? So you get
Yeah.
like a credit card, and then you can just buy whatever you want
Yeah.
with it. Invest with it.
Well, it is, the line of credit can be in the form of a credit card. I think most of the time it is. It's what's they call it a revolving account. So revolving is where you can add and pay down and add more money to that line over time.
Okay.
So the balance fluctuates. You can take away and you can pay it down, all that stuff. A second mortgage that's a fixed mortgage is where you basically take out how much you need and then you make payments back to it, but you can't take any more. You've already set what you need.
Yeah,
And
yeah.
the HELOC gives you a little more flexibility. Rates are usually a little bit more, but it's
Are those rates flexible too, or do they stay the same way as when you like signed up?
HELOC usually is based on a variable rate, usually linked to prime, whatever prime plus whatever, depending on who you do it with.
Okay. And what's the percentage rate of how much you can borrow?
You can borrow.
If you have like full equity in your house, you own your house outright, you want to get a HELOC.
Yeah, you can. It depends on the actual lender. We broker that out to some other lenders we use,
Mm-hmm.
but it varies from upwards of 80%. You can get up to 80% of the value of your home.
Yeah,
So
pretty
it's
good.
there's a lot of opportunity to pull some equity out and do some investing with that.
Yeah.
Another creative financial tool for buyers is, I'm sorry, for lenders to offer our buyers is bank statement loans for the self-employed borrowers that just don't qualify with traditional income verification. Tax they this is a self-employed person who maybe claims a loss on their business. That person would have a very difficult time normally getting a loan. So Dennis, are there still a lot of people moving to Florida?
Yeah, there are still a lot of people moving to Florida. I think Florida is always going to be like some sort of relocation hub for a lot of Americans. And it's not just the weather. I mean, obviously we have great weather here. It's the
Mm,
lifestyle, the fishing, the beaches. But then it's also going to be certain tax benefits that you have here. We don't have any state taxes. We don't have any retirement taxes,
yeah,
and we have exceptional homestead laws, which a lot of
yeah,
a lot of states don't have that. And a lot of people don't understand what that is. But if you, for example, if you live here for 6 months and a day, basically, this is going to be your primary residence, Florida, and you can have homestead on your property, which means that you have certain legal protections. No third party creditor can come after your house, right? And they kind of cap the rate that they can increase your taxes by every single year. It's going to save you some money on taxes as far as the property taxes go. So
yeah.
it's terrific, and that's why a lot of people come down here for just for that.
I can always tell homestead property when I'm looking up for a client, or maybe have a property they're interested in. They want me to do run the numbers. I can always tell homestead property because I look it up,
Yeah,
and the tax bill is so low because that increase per year that it's locked in at. I think it's like 3% or something like that.
3%.
It
Yep.
it really it really it keeps the taxes low, and over a long period of time. I mean, your tax bill is like fraction of what everybody else at that time is getting.
Yeah, what I think is also really, really cool, and a lot of people don't know this, but that is transferable. So if you haven't, if you paid like a very low tax rate because you owned your previous home for 20 years, for example, your benefits for your homestead exemption, they are transferable to another property.
Yeah, they call it the
So
portability feature.
yeah,
Yep. The Another thing that this state, maybe you can confirm this, but Veterans. This is a great state for veterans.
Hmm.
Especially if you're a disabled veteran. We have, your a majority of your taxes, if you're disabled, depending on what percentage you're disabled. I mean, you don't have to pay. I mean, there's no taxes for you.
Yeah.
It does vary. There's some, I don't know the ins and outs exactly like where the thresholds are, but we take care of our veterans in this state, big time.
Yeah. As far as like out of state buyers goes, right? Does it make any sense for them? Like, does it make any difference for them to work with a lender that is like in Florida versus somebody that's outside of Florida? Like, are there any like differences there? Do you know?
I think having a lender locally who understands the market, understands, how the taxes work, understand um, how the appraisals work, you know, what could potentially cause some issues, with a transaction, closing. Um, Sometimes out of state lenders just don't understand these ins and outs and the nuances of our market. So,
I mean, if you have somebody that knows the area well, that knows, what's going on in Florida,
correct.
what benefits, then that can obviously translate to the buyer and
Yep.
save them big headache too.
And that's also going back to some of the programs we talked about earlier with the down payment assistance. There's, the Hometown Heroes is even available to a lender outside our
Yeah,
state. It's
and they
called,
wouldn't even know about it. Like a lot of times they're not very versed on
yeah.
things like that.
And there's other down payment assistance program. We didn't really go over the SHIP program, and there's other state and county down payment assistance programs that are available that out of state lender just won't know about.
Yeah.
Yep.
That's a good point. The last thing we're going to talk about today is lending, agent partnership, basically. And I tell people all the time, like it's super important as a realtor to have like a great team, right?
Mm-hmm.
And you guys at Movement Mortgage, I use you guys for all my transactions for clients that need financing, and you have even done my personal mortgage as well. So I appreciate that. And yeah, I mean, if I'm in a multiple offer situation, right, and I get a pre-approval from Movement Mortgage, which I know you guys screen the
Yeah.
buyer. You guys make sure you check the assets. You guys make sure you check the debt to income ratio. And in our market, that has a really good standing. Like your
Mm-hmm.
pre-approval letters, people know that it's solid, right? And so that has helped me many times in high stakes situations, multiple offer situations to win
Mm-hmm.
the negotiation and get my clients into a house. So the team you guys use as realtors extremely important, and that's very very valuable to me. So I appreciate that.
Yeah.
Yeah.
I think you can probably agree with me on this. If you're an experienced real estate agent
Yeah.
and you've been around the block a bit and you've seen everything, and you get a pre-approval from a bank that you've had a bad experience with, how likely are you to be excited about taking
Yeah.
that offer to your clients?
Yeah,
You
not
know,
very excited. I mean, I automatically, think about the scenario that happened in the past where I'm like, well, this was a problem, or, maybe the communication wasn't good, and I anticipate
Mhm.
that happening again. So,
Mhm.
yeah, that's a big problem.
we we take our relationship with our referral partners extremely seriously, and we care about contractual obligations that you guys are under, making sure that those are met. We make sure that communication, me in particular, I do weekly updates with all my clients, and you've been on the receiving end in quite a few of those. That
Yeah.
every Wednesday I call, everybody. I call the borrowers. I call the agent, buyer's agent. Also call the seller agent, which not too many lenders do. And I will send an email copying everybody except for the buyers. I kind of put the buyers in a separate bucket as far as my communication with them. But the agents and the title, I put everything in an email so everybody knows kind of where we're at in our milestones, our how we're progressing, to through the loan. If we're looking like we're going to make our closing date, if there's any potential issues, try to be as transparent as I'm legally able to, as far as some hangups we might have. And I find that if I'm upfront and transparent, and I communicate with everybody on a regular weekly basis, that when I'm asking for something, I don't have to rely on you as a buyer's agent
Hmm.
trying to convince a seller agent to do something like an extension, or to help with maybe help a little bit on closing costs, because I have been upfront and communicating. I can make that call, and I can reach out to someone. Hey, listen, this is where I'm at. I've already talked to you like 4 times on this. You know what we're dealing with.
Yeah.
Hey, can I get a little help? man, I tell you what, the
It
response
makes
is awesome.
it makes all the difference. And as far as like every closing I have is obviously a success story. But the timelines, as you mentioned, is very, very important because for me as a realtor, I have to make sure that all the contractual obligations timelines are met, right? And every
Hmm.
time we have the potential for an extension, that is also the potential for the deal to go south.
Yeah,
And we all know I mean, I've heard the saying before, and this rang true ever since, which is time kills all deals.
yeah,
And you guys are definitely very good at communicating, setting the expectations with the buyer, with the realtor, with everybody involved. And so, I have phenomenal success with you guys closing deals. So I
yeah.
appreciate that.
Yeah, time is very, very precious. What I think one of the things that is different about movement in my team is that we don't get a contract. We don't look at a contract that comes in that's a 45-day close and say, oh, we got lots of time. We don't need to rush on this one. We'll just put this on the back burner because we got this other one over here.
Yeah,
Every loan gets equal attention and still has to meet. Still, things have to be done within a time frame that we've set as a company. It's company standard. When I submit, how fast we get our conditional approvals. I
yeah,
mean, it's typically 7 hours from me submitting it. We get a conditional approval within 7 hours, and that's within a day. A day or so of that we're getting those conditions out to the borrower, and we're working on those. It allows us to get in a position when you're making every loan's a priority, not just the ones that close in, at a certain time. We don't stack them up in order, but if we're making every loan a priority and we're working to make sure that every loan follows its own specific date timelines, then
yeah.
we get in a position where I can call you as a buyer, or even if it's one of your sellers that I'm help one of your a buyer that I'm helping on the seller, and I can say, hey, listen, we got this thing clear to close. You want to close early?
Yeah, no, that's very true. I mean, life happens, right? Everything
Yep.
happens, and you never know what can happen. We've seen it all, right? And at the end of the day, yeah, that's going to be very important. But yeah, I think our time's over here today. So I appreciate you
Yeah.
inviting me over to this podcast room here.
Appreciate.
It's really nice. If you guys, if you're watching right now, if you have any questions, if there's any topics that you guys want to see in the future, leave a comment down below, and I'll see you guys next time.
Thanks.